Ladies and gentlemen, good day and welcome to the Kriti Industries Limited Q4 and FY24 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Tushar from Ventura Securities Limited. Thank you and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities Limited, I welcome you all to Kriti Industries Limited Q4 and FY24 earnings conference call. The company is today represented by Mr. Shiv Singh Mehta, Chairman and Managing Director, and Mr. Rajesh Sisodia, Chief Financial Officer. I would now like to hand over the call to the Managing Director of the company, Mr. Shiv Singh Mehta, for his opening remarks. Thank you, and over to you, sir.
Good evening, everyone, and welcome to the earnings conference call of Kriti Industries India Limited for the fourth quarter of the financial year 2024 and financial year ending 2024. In Q4, financial year 24, total sales volume were 17,554 metric tons as against 15,083 metric tons in Q4 of financial year 23, which grew at around 16% on year-on-year basis. Also, on segmental front, in Q4 24, the company registered a growth of 75% in volume in the building product business compared to Q4 of financial year 23. I am very happy to inform you that the company has achieved a strong revenue growth for the full year with significant turnaround in margins and profitability versus last year. During financial year 24, the company registered an overall growth of 28% and 18% in volume and value respectively. On a year-on-year basis, with total sales volume of 75,655 metric tons against a sales volume of 59,148 metric tons, sales volume for the agriculture segment grew by 16%, while industrial solution grew by 59% and building product by 75% year-on-year. I will hand over the call to our CFO, Mr. Rajesh Sisodia, to give you the financial highlights.
Thank you very much, sir. Very good evening, everyone. Let me take you through the financial performance of our company on a consolidated basis. Q4 2024 revenue is around 195 odd crores, which indicates a growth of 3% on YOY basis, with quantum growth of 28% and price down effect of 7.5%. The EBITDA stood at around 14 crores, with an EBITDA margin of 7%, which the company has been able to showcase in last 3 quarters. There is a dip by 124 basis points on a YOY basis. Net profit was reported at around rupees 4 crores in Q4 2024 and a PAT margin stood at 1.85%. The revenue for financial year 2024 is around 867 crores, which grew 18% year-on-year basis. EBITDA is around INR 60 crores with an annual EBITDA margin of 6.87%. And net profit of your company was around INR 22 crores. The PAT margin on annual basis stood at 2.53%. Regarding the segment-wise revenue for financial year 2024, agriculture, industrial solutions, and building products contributed 62%, 26%, and 12% respectively. Thank you. I would like to open the floor for questions, if any, on the results.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have any questions, please press star and 1 on your telephone keypad. If you would like to withdraw your request, you may do so by pressing star and 1 again. Our first question comes from Rahul Jain from Credence Wealth. Please go ahead, sir.
Hello. Am I audible?
Yes, sir.
Yeah. Good evening, Nana sir, and good evening, Rajesh sir. So, a couple of questions. Sir, on the overall demand scenario, since we are going into the next year and the quarter one happens to be our best quarter with regards to more towards agri part. So how are we looking at the overall situation on the ground in terms of demand? We have already crossed about 1 month and some more days. So till now, how has been the demand from the agri side and also the other segments? That is my first question.
The demand scenario looks to be fairly good because prices are affordable and we are seeing good traction on the top line.
Mm-hmm. So are we in for a record quarter in terms of revenues?
Yes, it looks to be a good quarter. Agriculture demand is quite robust.
Okay. And sir, in terms of the margins part, so even prior to, say, COVID also, when, we were recording around 400, 450 crores of sales or 500 crores of sales, our EBITDA margins have been in the range of around 7.5%, 7 to 7.5%. Leaving aside 1 or 2 years where probably we gained on inventory or we lost on inventory. Today our revenues are almost about 860 crores. The operating leverage doesn't seem to be kicking in, and this is based on my understanding on the numbers. What I can read is the other expenses have gone up sharply. The last 6 quarters, the average run rate of expenses on the other side, the other expenses are in the range of 19-20 crores, which was in previous 1.5 to 2 years was in the range of 11 to 12 crores. So basically, sir, 11 to 12 crores has gone up to 19-20 crores in last 6 quarters. Every quarter we are spending around 19 to 20 crores. So sir, ये जो additional around 8-9 crores, if you could share some details, where is being this spent majorly, to get a sense ki whether, these expenses can result in some kind of benefits going ahead.
See, as I told you earlier, developing building material is taking a lot of effort in terms of footwork as well as BTL, ATL efforts and dealer development initiatives. So as we are trying to expand in building material, initially our expenses will continue to be little higher, and as the volume ramps up, we will be able to distribute these expenses on a larger sales base. So then it's only then you may see that our expenses per unit of sales will be within a range, and then our margins should look up.
So, mota, sir, are we done with the other expenses, or are we done with the development and promotional and marketing expenses for building products from here on? The growth in that expenses will not be large enough, or it will be very minimal?
It will not be. It will certainly proportionately come down, because as the markets mature, as the sales grow for every territory, the per unit expenses would certainly show a better margin for the performance of company.
Last question, sir, on the capex side, our gross block is up, and plus we have a CWIP also in the balance sheet. So, with regards to the capex, if you could share more details, and also the building products, I understand a lot of this is going towards building products, the expansions of the SKUs. So till date, whatever capacity we have built in the building product division, at this peak capacity utilization, what kind of revenue can be generated from the building products segment?
See, building product, as you would know, this year we have shown a total sales which is grown by almost like in terms of tonnage about 79-80% to about how much is that? 75% growth. 75% growth. So obviously this all addition of range and product quantities, the initial investments have to be high. So this is where most of our expenses are in developing range, developing capacities, appropriate requirements of market for CPVC, for UPVC, for fittings, for pipes. So we are now almost ready up to a level where we will be able to expand our market because we have a larger range to cater.
No, so just to clarify, this existing capacity which we have already built till date, that can at peak utilization, what can give us what kind of revenues in this segment? जो हमने capacity तैयार की है, on that capacity
170 crores as a revenue. We are at about 104 crores today, last year. But the capacity here is, we can easily, if all the sizes are properly, utilized, we can easily expand our sales from 1.5 to 1.6 times of current sales.
Sure. Thank you, sir. I have some more questions. I'll come back. Thank you.
Thank you, sir. Our next question comes from the line of Ankit Gupta from Bamboo Capital. Please go ahead, sir.
Sir, on the building product side, the kind of efforts we are making last year, and despite having a low base of less than 5,000 metric ton sales in FY23, our building product sales in volume terms has grown by 62% last year. And if you look at the quarterly performance over the past 3-4 quarters, our building product sales has been around 700 tons per quarter, and it has remained in that range for almost 3 quarters now. So what has been the reason for the sales to be stuck in that range for past 3 quarters, and how do you see the growth in the building product segment for FY25?
You see, our growth in terms of tonnage in Q4 to Q4 is about 75%. And if you compare our sales in Q3 to Q4 in building materials, it is about 23% growth quarter on quarter.
Just wanted to clarify, the numbers given in the presentation for the building product sales is around 1674 compared to 1237 metric ton last year.
Our sales in Q4 is about 1,149 metric tons. Against last quarter was 1753, so it's about 23% growth.
Okay, maybe some error is there in that. Yes, sir. So, how do you see the growth for next year, and how do you see the scale up?
Quite hopeful to sustain this.
Okay, so even on a base of, let's say, 100 crores sales for...
Rather, going forward, able to do better as our range is now available, our marketing abilities have improved. So we are quite confident that we should be able to maintain the growth rate.
Okay, sure. Because on the margin front, in this quarter, has there been any inventory loss that we have incurred because our realizations have come down?
Any inventory loss, but yes, our expenses have grown because of our efforts on the marketing side. And as our range has come up now, the larger full portfolio up to higher diameters, we have to put in a lot of effort in terms of putting products on the shelf everywhere.
So, let's assume the prices for the PVC stay at the current levels, and we see a significant ramp up in the building products that we are envisaging for FY25. How do you see the margins for the company panning out for FY25? Last year we reported close to 7%, 6.86%, 7% EBITDA margins. For next year, how do you see the margins shaping out?
margins will certainly improve because building product is a major area where we are putting in investments and where we are, seeing the traction quarter on quarter. Once the volume of building products grow, our expenses will be distributed on a higher base, and that's where the margins will improve.
Okay, so will it, we were earlier targeting to reach early double-digit kind of margins, given the scale up that we were expecting?
We are trying our best to hit a number which is towards double digit. Let's hope that quarter to quarter we are able to demonstrate it.
Okay. Thank you, and wish you all the best.
Thank you, sir. Our next question comes from the line of Viraj Mehta from DVD Capital. Please go ahead, sir.
So my first question is regarding our agri markets. On an aggregate level, in the districts that we are present in Maharashtra, what is at some point 2 years back, you used to say that wherever we are present in Maharashtra, we have 10% market share. What would be our market share today in Maharashtra?
We are around the similar level. Exact district by district may vary a bit, but on average, we will be around 8 to 10% market share in different areas. And
so my second question is, aspirationally, sir, if I look at some of our larger players, even in BP or in agri business, they grow on very large base of few thousand crore revenue, 8,000-10,000 crore revenue, and even in piping 5,000-6,000 crore revenue. Their aspiration, and they actually grow much faster than us, even on that base on volume terms. What is it with such penetration? We basically are investing also, we are increasing penetration also, but somehow that doesn't translate into numbers, right? What is it that we are missing?
It's a very important question, which we as management have been reviewing and internalizing. But you see, unless you go multi-locations, the volume growth will have to be within a range of what we are achieving. But once because India is a very large territory, transporting pipes beyond a limit is always a cost, which is a challenge. Building material is somewhere where costs are affordable. So as our building materials business will grow, we'll be able to reach out to larger, bigger, distant territories, and that's where we may see more traction in coming days. Because building products are comparatively of a higher margin business as compared to agriculture business.
Sure, sir. And sir, a few years back, we used to talk about our new plant in South India, in Karnataka, with now reaching 850-900 crore top line. Where are we in terms of diversifying locationally and also providing us easier access to South India market?
Yes, basically debating within our team to do it. Actually, the fire incident here, which we had in a major setback, and that's why our plans and our supplies during period had impacted our business plans. But we are again rebuilding all these are initial plans.
Okay, sir. Best of luck.
Thank you, sir. Our next question comes from the line of Twanil Desai from Turtle Capital. Please go ahead, sir.
Hi, good afternoon, sir. So my first question is, FY23, Q1 was on a very low base, so because of the fire incident. So if you adjust for that, there is hardly any growth compared to FY22, because FY23 first quarter base was low on the agri side of it. So, sir, again, coming back to the earlier participant's question, we are getting into so many geographies, we are trying to get higher market share, but agri segment, in spite of lower PVC price, seems to be somehow, not growing beyond single-digit volume growth. So what is it? So is it that we need to go to the double-digit kind of a growth? We need to have another plant. Without that, we can't move to double-digit volume growth. Is that a right assumption to make? Can you talk a bit more about that?
See, we had a fire almost about 2 years back. So last year data to this year is not based on fire. Last year was a clear operational year. So based on that, quarter on quarter, there is a growth in agriculture, which is about 18-19%. What is that number? Agriculture side is about 16% growth on the it's an annual basis. Quarter on quarter is about 14%. So the agriculture side, staying here within a limited geography from one location will always be a constraint. We will have to go multi-location. Then only we can expand agriculture faster because any area to have a market share beyond a reasonable 45, 50, 55% is very difficult to grab. So we are certainly planning for a multi-location, which we will, once our plants are frozen, we can take a call on that.
Okay. Sir, I think, again, correct me if I'm wrong, but I think the fire took place in May or April or May of 2022, which is first quarter of FY23. Isn't that right understanding?
Right. First quarter was impacted.
So, sir, if I adjust for the entire year, and because the first quarter of FY23 was a very low base, right? So, because we lost some business because of the fire. So the actual volume growth on a normalized basis is much lower than what it looks. Isn't it the right way to look at it?
I would say to partially what you are saying has a merit, but we are seeing traction quarter on quarter. If we see, we will be able to see that unless and until we go multi-location, a growth beyond a point from a single location will be always a challenge.
Got it. And sir, I think we have been talking about this second plant or multi-location strategy for some time, and for various reasons, we have not yet decided on that. But what are the key parameters as a management you look for to go for this multi-location? I think one thing you talked about repeatedly in earlier calls was that you need to have a critical volume in a geography to give the base load demand for that plant. So I'm saying, what are the decision points which will come in the near future or medium term which will help you take that decision?
See, we are looking for a critical volume, and we were towards that when our plant fire disrupted our supplies. So we could not continue the momentum which we had got at that point in time. So we have been once again realigned that momentum, and we are seeing improvements, certainly. But once you had reached there and then there was a breakage, so once again you have to build that territory which we are been working towards. So now we are hopeful that we should be able to show significant improvement towards these territories where we want to achieve critical volumes.
Got it. And sir, you have been saying that we are investing on the building product side to scale up the business, and hence the margin it's slightly subdued because of that. So is it fair to assume that on a building product standalone, let's say its normalized margins are 12, 13, 15%, because we are investing at the current scale, which may be a subscale business as of now, our margins are lower than what it should be, let's say 14, 15%. Is that a right way to look at it?
Yes, because our expenses are much higher per unit sales. Okay. Even prices are reasonably priced. The expenses per unit are much higher. That's why our margins shrink.
So you think when we reach that 170, 180 crore, we should be able to get to at least 12, 13% kind of a margin on a building product basis, or you need much higher scale to get to that number?
People are having better margins than 12, 13%, but we internally look at 12% margin once we reach that number on building material.
Okay. And the last question. So you said that with the capex that that we have done and we are currently in WIP, we can do 170, 180 crore kind of number on the building product side. Now, as we have aggressive growth plans on the building product and on 105 crore base, even if we go 50-60%, we will again be kind of running out of capacity to that extent. So, do we continue to do further capex, on the building product side? What are your thoughts on that?
It will all depend the progression of sales. But yes, we are ready as an organization. If there is a situation where we feel there is a justified reason for us to increase our capex allocation, we will not hesitate from that.
And last, just a clarification. I think in your presentation, the volume or tonnage for building products is 1674, which I think you mentioned is around 2100 tons, right? Is that, did I hear you correctly?
Yeah, 2149 is the number.
2149. Okay.
Yeah.
Okay. Great, sir. Thank you. That's it from my side.
Thank you, sir. Our next question is from the line of Miraj Shah from Arihant Capital. Please go ahead, sir.
Thank you for the opportunity, sir. Good afternoon. I just have a couple of questions. So first is a clarification. In the start of the call and to answer to one of the questions, you had mentioned that at peak utilization you can do 170 crores. Was this for the agricultural segment? For which segment was this for? I didn't quite catch that.
Building materials.
Building materials. Okay, understood. And post that you said 1.5 to 1.6 times of current. So that is building materials only because you're doing 99 crores of top line currently in that segment.
Building material only. We have done 104 crores this year.
Understood. Okay. So the next question is that in our presentation, I can see that our capacity for building materials is close to 6,600 tons. And this year we did a top line of 6,700 tons. Now we, in our thought process going ahead, we are saying that with the increase of volumes in building materials, we'll be able to have better margins and better scale as well. So you've also mentioned about the 20 crore capex that you've done. So what is the current actual capacity of building materials that is available now?
So we are almost like doing, last year we have done 7,000? 6,000. 6,580 tons. And we can easily scale it up 1.5 times, so it will be about 9,000 to 10,000 tons.
So we have a capacity of 9,000 tons because in the presentation it's just 6,600 tons.
No, 6,600. Capitalization is still in, has been done, so it's a old number. Yeah, it's old number. It's about almost 9,000 tons that we can easily do with the capacity already installed.
Because our current capacity is 9,000 tons, and this includes the capex of 20 crores that is mentioned, right? So in 20 crores you've added 2,300 tons for building materials. And so just want to have some clarity, the point that you're mentioning to go multi-location. So what is the progress on that part? Have you finalized any location or have you started any plant in any location? If you can just throw some light.
And we still, our plans has to be crystallized, We are looking at a critical mass which we are going towards. Actually, we had planned it, but because of disruptions year before last, our plans had to be revisited, which we are in the process.
Understood. Okay, and sir, can you also mention the order book that you have currently?
You see, in agriculture, every day there is a continuous order inflow because we have dealers. So there is always continuous order inflow and supply. There may be shortage in some sizes, there may be some available stock, but overall in few days, everything gets supplied. Understood.
Okay. And sir, I missed one point that you mentioned regarding guidance. For FY25, can you just repeat what had you mentioned? I believe you said something about double-digit margins. If you can just repeat.
I was asked that in building material, normally people have a much higher margin. So in building material, where do you aspire to have your margins once you achieve your capacities above 160, 170 crores? There I said we are aspiring to touch double digits in building material itself.
Understood. Okay. Sir, any guidance on the top line for FY25-26?
So we certainly hope to grow at 20% around in terms of top line.
Okay, perfect. Thank you so much for your time, sir, and all the best for the future.
Thank you.
Thank you, sir. Our next question comes from the line of Saket Kapoor from Kapoor & Co. Please go ahead, sir.
Yeah. Namaskar, sir. And sir, firstly, if you could just give a number of how much have we spent on this building material capacity as on date, and what portion is left in the work in progress, capital work in progress?
How much is the total value?
Total, we have spent 40 crores.
Total 40 crores we have spent.
VP and column both were there.
So let's say about 40 crores is our total investment in CapEx so far.
As on date, we have spent only 40 crores on the total capacity of 6,600 metric tons that we have built. Okay.
And we also have certain work in process, which will be getting capitalized in coming months.
Yes. What is that amount, sir? What will get
about 15-20 crores put together.
Okay. So in totality, it's around 65, 65, 70 crores. That 60 crores.
You see, what happens then when you go for an expansion, you are also balancing other equipment.
Okay. Come again, sir? Hello?
There are balancing requirements,
right,
which are also part of the expansion. So that is where, like in the terms of infrastructure, in terms of electricals, in terms of everything. So put together, we are putting that much of money.
And our peak turnover from this building material will be around 180 crore.
Yes.
And sir, just for my understanding, I'm new to the company. What do this building material constitute, and where are its applications? We are in the PVC special segment, PVC pipe segment. So when you are selling building materials, what are you alluding to, sir?
See, in any house, if you look, or any building, you will see there is a requirement for transportation of water, for sewerage, for drainage, for ducting. These are all part of building material. Plumbing pipes, sewerage pipes, water, drainage, all pipes and fittings.
All pipes and fittings are clubbed as building material.
Yes.
And sir, here we are catering to B2B or B2C also?
We are generally in a B2C segment so far. And now since we may be getting registrations with various departments where a lot of work has been initiated by government. So we may be now looking at B2B over coming period of time.
Right, sir, in your presentation you did mention about the government schemes with reference to the tap water availability at home and also I think to the telecom duct part of the story, wherein the laying of optic fiber cables are laid through the telecom duct pipe. So this telecom duct is also a part of the building material constituent on this?
It's about industrial supplies. That is the segment we are, institutional sales or industrial supplies. This is where they are. Telecom duct is not part of building material.
Okay. Okay, sir. That forms the industrial space that the segment you mentioned, right? Right. And sir, you also mentioned that you are expecting higher sales from the value-added segment. So that is the ramp-up which you are expecting in the building material that will contribute to the value-added part?
That is building material. That is column pipes, which are also piped in a bore well in a building, what you put. So all is that there.
Okay. And so this selling is through the real estate people mainly, wherein they are the main buyers, and we have our contracts with them with the type of construction or the real estate that they will be building up. That's how the selling is planned.
So presently, we are selling through our distribution network, which is the retail network. In every city, you have shops which buy products in different locations and territories. But now since we are completing our range, we will be also looking at supplies to builders and contractors who are into the building space. Building developers, Now is the process that we will start.
Okay. And just lastly, 2 points. Firstly, when we look at your consolidated numbers, therein your debt number goes down. So if you could explain both at the I think so the current the long-term maturities, I think so the long-term debt goes down when we look at the consolidated numbers. So can you give us an understanding why is that so in the balance sheet part?
I would like to clarify that matter. We had one subsidiary under our company which is being consolidated. That subsidiary is under the process of closure. We had declared 2 years back. And the name of the company was Kriti Auto and Engineering Limited. So that company had profits. Now, during the course of merger, those profits have been shown as borrowings in the holding company. So when the consolidated financials are prepared, those intercompany borrowings are eliminated. Therefore, the figure goes down from the long-term loans.
Okay. So what is the current number, sir, for the company as long-term
borrowing? Approximately 9 crore rupees.
Come again, sir? Long-term borrowing?
9 crore.
9 crore. And our short-term borrowing requirements are?
Short-term borrowing requirements are approximately 200 crores.
200. And the blended cost of funds?
Is running around averaging to between 9.25 to 9.75.
Okay. And sir, MD sir, you alluded to the fact that this year we are anticipating an improvement in our margins going ahead for this year, and with greater contribution from this from the building material segment. This is what the sum and substance should be, and on what we closed for the last year, we can expect improvement in both the margin and the top line.
Yes.
Okay. But sir, what were the key reasons why we posted lower profits for Q4? What factors did affected our Q4 numbers?
You see, as our sales in building products have to grow, we are doing a lot of groundwork in developing market, advertising and promotion efforts. So our expenses are comparatively higher for the initial phase. Once the volumes get ramped up, automatically the expenses will be distributed on a higher base, and then we would be able to get better margins overall.
Can you give an annual number for the same, sir, so that we will get an understanding how much extra money or the promotion expenses or business development charges for the building material has gone into the P&L, which is not attributable to that segment?
Actually, building material, we must be spending a lot of money on promotion. For even a quarter, it may be more in excess to 3 to 4 crores over normal expenses, which industry should provide or should have as a sales to expense ratio. So our sales, as they will grow, this number will get absorbed on a much larger base, and then automatically the margins will improve.
Right. And lastly, sir, agriculture is the biggest pie in our case, and that is also on the vagaries of the nature and the monsoon. So what are the risk mitigation strategies that are in process, or agriculture is the largest contributor to both the top line and bottom line? So what's the ballpark going at 2-3 years down the line? Well, how is this mix likely to be? What are we emphasizing, sir?
You see, agriculture is growing. I mean, building products may be growing faster than agriculture generally, but agriculture is still growing in India and growing reasonably. But agriculture, as you said, has peaks and troughs, because you have certain months where it doesn't sell much because of during rains no one will put pipe, or after post-harvest and during harvest there is a difference, because while the crops are standing, it's difficult to lay a pipeline inside. So you have only peripheral pipelines laid during that period. So there are peaks and troughs in agriculture, and that is why a company has thought about getting into building material, because same material is mostly required other than CPVC, which is for building product. And we are able to utilize our plant much better throughout the year without much variation in seasonal changes.
Right. And sorry for my repetition, but when you mentioned about multi-locational plants going ahead, so what kind of capex is on the drawing board in terms of the multi-location part of the story? And when can we expect we could hear something on the same? Any size or the color you can give?
Any plant will have to start with a minimum required capacity, which would be about, say, 20,000 tons around annual capacity. And as the markets grow, then you can keep ramping up the capacity. So for a 20,000 around capacity plant, because it will have agriculture as well as building material pipes requirements, so there will be about capex of about 35-40 crores minimum to begin with, which can subsequently be scaled up.
So not a big investment in that case. Not a large investment. This is a greenfield.
Right. It is steps.
Correct. Thank you, sir, for all the answers and all the best. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from the line of Sampath Nayak from Tiger Assist Private Limited. Please go ahead, sir.
Hi, sir. So my question is on, you said on peak utilization will realize 170 crore of revenue. So can you tell me when can we reach peak utilization? When do we aspire to go there?
We grow quarter on quarter. By quarter 4 in the current financial year, we should be inching towards optimum utilization of the whole capacity we have.
Okay. So, all right. So, like by FY25, we are planning to reach 170 crores of revenue. Am I correct?
For building material. Yeah.
Yeah. So like soon we'll be hearing capex plans for the building material.
Right.
Because, okay. So like I just want to understand what is your guidance especially in the building material for next 3 to 4 years. So I mean like geography wise and revenue wise and margin wise.
See, once you reach more than 200 crores in building materials, your strengths are very different, and then you are looking at a very different capability. The growth rates could be very different. Your ability to serve various types of markets and customer profiles is much better. So till you reach 200-250 crores is a different journey, and thereafter it's a little different journey in terms of your abilities to expand.
Okay, so I mean, so can we expect like 50% year-on-year growth for next 3-4 years in the building material?
Building material, we should be showing that kind of growth.
Okay, and like will the margins improve as the revenue increases?
Definitely, because the expenses will be distributed at a much larger base. So automatically, the inherent cost per unit will come down to give you more margins.
Okay. Thank you, sir, and all the best.
Thank you, sir. Our next question comes from Hina Ora from DAM Capital Advisors. Please go ahead.
Hello. Yeah, hi. Thank you for the opportunity. So I would just like to understand firstly which are our key markets for agri and what sort of contribution comes from each of these markets?
Can you again repeat your question? You were not very clearly audible.
Sure. So I was asking which are our core markets for agri sales and what sort of contribution comes from each of these markets?
See, our core market for agri is Central India, which includes MP, Rajasthan, Maharashtra, and adjoining areas. Because our periphery is defined by the distance. We are developing new markets, but that is where we are making extra provisions of and bearing extra freight costs as of now.
Understood. Well, the reason I asked this question is, from our channel check, what we understand is demand has been quite robust from March, especially now that you said Rajasthan. Even in Rajasthan, things have been quite good in April. So I just wanted to understand, given that things are so good, why have we missed out and why are we on a 16% sort of YOY growth for the fourth quarter?
See, rather than demand in Maharashtra was little down in the fourth quarter, so was MP. But now things have improved in last, this current season, because normally April, May and June is a quarter which is quite aggressive for agriculture. So we are seeing a good growth.
Okay, so what you're trying to say is this will spill over into the first quarter.
Yeah.
So what sort of growth are we expecting for the first quarter?
First quarter we should show in building material much better growth, but for agriculture we would certainly be able to demonstrate double-digit growth.
Double-digit YOY growth.
Q1 we are talking at the moment, because post-monsoon we'll have still monsoon and what kind of, though the forecasts are good, but let's see how we...
No, I meant versus first quarter of last year, right? Double-digit growth versus the first quarter of last year.
Yes.
And just another thing, sir, are we seeing a lot of competition from our larger peers, since all of them have been cutting prices, and we've heard even on the PVC side there are some players who are being quite aggressive. So somewhere have we lost market share to these players?
No, presently we fortunately have a brand which is very well accepted by market, and we are able to command the price in agriculture segment. So we are commanding our price and premium, and we are selling to our optimum abilities and capacities.
Okay, sure. So sir, by peers I meant the market leader, right? We've heard that they've been quite aggressive, and somewhere I read that they're saying that they have gained this market share from the smaller players. So which is why I was asking, if there's some market share loss that we've seen in agri.
Agriculture, there will be always players will always try to maximize their business, but we as a company to have a clear position on the price and the market share, and we have to balance two things appropriately.
Okay, sure. Thank you so much, Arvind. Those were my questions. Thank you.
Thank you, ma'am. We have a follow-up question from Rahul Jain from Credence Wealth. Please go ahead, sir.
Hello.
Yes, please speak.
Sir, sorry, I'm a bit confused on this capex side, sir. So the first time when you announced a 30 crore capex on building products, somewhere in the second half of FY22, we mentioned that time that we are building up a capex of 30 crores, and probably from that capex we were planning to build a capacity which would be 50% higher. So my understanding was that at that point of time that 30 crores capex would have yielded us a top line of about 150 crores. And in the current presentation, we have spoken that we have done a capex of 20 crores now. So basically, 30 plus 20, this is 50 crores total capex. So this 50 crores capex should result in a much higher sales, is my question, or is my understanding. So where am I going wrong, sir?
Prices of material, if you see prevailing at that time, and prices of material prevailing now, there is a reduction of about 35-40% in terms of the raw material base price.
Mm-hmm.
If you look at tonnage-wise, these will offer higher tonnages, but the value-wise, it will not result in the same values what was anticipated at that point in time.
No, sir, I understand that. So if I look at your quarter 3 presentation of FY22, that time also we had a building product capacity of roughly 6,000 tons.
Right.
And then we started spending roughly 30 crores.
Right.
That is what we had planned to spend, 30 crores.
Right. Yes.
So when we speak now, so now the capacity is say 9,000, 10,000 tons, somewhere between 9 and 10, as what you mentioned to one of the previous participants.
Right.
Is it that we have spent 30 plus 20, 50 crores to go from 6,000 to 9,000?
Yes. You see, the larger sizes and fittings entail a lot of, when you expand your range, the actual capex, the capacities will further grow till you add the more molding machines other than as the demand grows. So the same equipment can be utilized for a larger top line while you have a smaller capex to utilize the moldings to a full extent, the range, So initially you have to invest in a mold, which is quite an expensive proposition, because same mold cannot be producing 2 fittings, but same molding machine can have 2 molds or 3 molds on it.
Okay, sure.
Now I will explain the point.
Got it. Yeah, to an extent I have understood. So, sir, now as we speak today, our current capacity after this 20 crores capex spent at today's price can give us somewhere around 160 to 170 crores of sales, correct?
Absolutely, right.
And then to go up to 250 crores or 300 crores, what additional capex will be required?
It will be more on the machine side, the molding side. So there will be balancing. So the additional capex will be lower, much lower.
Okay. Sure. Fair enough, sir. Thank you so much. Thank you.
Thank you, sir. We have a follow-up question from Twanil Desai from Turtle Capital. Please go ahead, sir.
Sir, just one question. So on the industrial side, I think our volumes have gone up sharply this year from 10,000 odd to 17,000. So that's quite a sharp jump, and we are doing around 5,000 tons every quarter kind of a number. So, and I think you are not too keen to grow that segment because of various factors. So shall we assume that it will grow at steady state single-digit number, or it is like project to project basis and can again come down from 17,000, 18,000 to again much number? How should we think about that?
As I've been always saying, we have a limited exposure to this till the payments are in time or the government payments to the EPC contractors are intact and we are assured of the payment cycle, we will continue supplies. We have scaled down a bit because of the election time. Already we are seeing there is a little difficulty in terms of EPC contractors continuing their business with vigor. So we will not extend. I don't see a major growth here. It will be more towards stable from these positions, and we will be quite watchful and careful in exposing ourselves beyond a limit.
So more of a flattish kind of a thing that we expect on the...
It will be flat. What's a flat?
It will be flat. Okay. Got it. Thank you. That's it.
Thank you, sir. We have another follow-up question from Sampath Naik from Tiger Assets Private Limited. Please go ahead, sir.
So my question is, to install additional set of capacities, what is the average timeline you require?
It's a new location, greenfield project or a brownfield project?
No, are you planning brownfield or greenfield?
In the capacity expansion in the same location takes about 3 to 4, 5 months maximum. But if you go to a new location, it will be about 7 to 8 months cycle.
So, are you planning for a brownfield or greenfield expansion?
We We are contemplating over period and that we have to go multi-location. So that's where I thought your question was.
Yeah. So I just want to understand, because by FY25 we'll be utilizing our building material capacity, right? So for new set of revenues to kick in, we would need additional capacities. And have we already planned the location, or have we?
No, that's where we are looking at critical volumes. You see what happens in a business. You would always like to see which products you have a higher transportation cost and where you can afford a transportation cost, so that you will go for efficiencies and economies based on overall supply chain costs and optimizing it.
Okay. So, yes, sir. I couldn't understand.
No, you see, there are certain voluminous products where the transportation cost is very high, but there are certain products which is not voluminous. So you can centralize those productions and you can distribute those productions which are to be decentralized. This is how it is.
Okay. What I'm trying to say is, even if we focus on efficiency, we would still need a capex, right? So what I'm trying to understand is, for FY25 you said you'll achieve 170 crores and say again 50% additional growth in FY26, and we still haven't I just want to understand how will we achieve that growth, because there is no guidance on capex from your end. So that is just what I'm trying to understand.
This is why I said going forward we will have a mid-year review in terms of our ability to identify if we have reached critical volumes, and accordingly we shall plan so that by the next year we are ready with the requirement of the market.
Okay. All right, sir. All right. Thank you so much.
Thank you, sir. We have a follow-up question from Saket Kapoor from Kapoor & Co. Please go ahead, sir.
Yes, thank you again. When we look at our fixed assets, sir, in terms of property, plant and equipment and the capital work in progress, that totals to around 168 crores. So on the capitalization of the entire 13-14 crore that is left, what kind of turnover ratio can we expect? 180 crore you have already alluded to 180 you have already alluded to the building material. So yes, sir, please.
Last year we have done about 860 or 870 crores.
Right.
So if we look at a growth of about 20%, we should be close to about 1,050 crores next year.
Okay. And this will include this 180 from building material, ramping up of the building material.
Even in 866, it's included at the moment.
860 में क्या breakup था sir building material का?
Building material last year was about 103, 104 crores.
Right. And sir, for the debt number, can you please provide the long-term debt once again? My line was
the long-term debt.
So we have a long-term debt of approximately 43 crores as on date in the books.
43 crores. And so our current maturities?
Out of this, the current maturities are to the tune of 13.5 crores.
And sir, our current rating? What is our current?
Triple B plus.
Come again, sir. Sorry.
Yeah, the current rating is triple B plus, CARE.
Okay, and we are rated by which agency?
CARE Ratings.
CARE Ratings. Right. Thank you, sir. Thank you for all the elaborate answer and all the best. Thank you.
Thank you, sir. That was the last question for the day. Now I hand over the call to the management for closing remarks.
Thank you for the time and sparing our time for our call. We look forward to your support. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Ventura Securities, that concludes this conference. Thank you for joining us, and you may disconnect your lines now. Thank you so much.